Morning traders, welcome to the Traders Lab. I'm your host Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thanks Stephen and thank you Marty. Good morning everyone. Welcome to the Trader Lab. I'm your host Tom B. Appreciate you stopping by the lab today. We got a lot to talk about. Of course, there's news this Monday, March 23rd, 2026 about potentially the war with Iran being resolved shortly, and that talks are taking place. Now, whether or not you trade on news, I'm going to say I do not. I always take news into consideration. However, in the end, it is what the participants vote with their purchases or sales in the market. And as a trader, it is very important to isolate, in my opinion again, isolate yourself from what you think it means and look at how others actually react to it. So I personally have a substantial filter in my trading plan to what might be hyperbola or exaggeration versus ultimately looking at the participant behavior. So I just put the news aside and I go, well, how do the participants react to the news? And then what do we do about it? This is where the business of trading comes in. By that I'm saying is knowing what you will do based on the plan you have developed, not getting emotionally attached to what may or may not be material as far as the market participants. So let's go take a look at Friday and see how that plays into what the condition of the market is as it relates today. So are we trading the news and our emotions and our FOMO? Are we just trading like professional traders? And of course, the outcome of any trade or any interaction, no matter what it is always random. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is for educational purposes only. It is based on structured trades. These are available to everyone in the Bookmap Discord TraderLab community. And if you're visiting in YouTube, you too are invited to the TraderLab. And there is no cost for TraderLab, but remember what the TraderLab is. The TraderLab is a community of like-minded traders who have come together to leverage their collective experience. This is not about me, it's about you. Data mining, understanding market mechanics, differentiating outcomes from typical retail trader behavior. And of course, you have to do the work. You have to actually find out if you have a statistical edge and only get involved in the market when that edge appears. You can develop as many edges or trades as you like, but I always like to come back to the primary thing. If you can't do one, you will do none. And most of us, because of our, think of it, our dopamine and the need to be right and all this attachment to outcomes and P&L and L and the rest of it, that is what takes most developing retail traders out of the business. This is not about your P&L. This is actually about your plan and developing the emotional maturity to separate yourself from your impulses, your fight and flight, your FOMO. You all know about that. But how do you separate yourself from that strong primal drive that overwhelms your intent? If you're a trader who says, I'm not going to bail out next time, I'm not going to chase the market, and then you still do you understand why that happens? Now, if you keep repeating that, then you haven't solved for it. And if you come to TraderLab, maybe we can help you with that. Now, I'm not saying it'll solve it for you, because what you're going to find is that you have to change what you do that works here on the planet Earth, if you might say, non-trading, does not work in trading. And our typical response to these elements is to try to fit trading into our emotional and psychological needs, certainty, predictability, all this kind of thing. How about you're in an environment where it doesn't exist? What do you do if you're actually in an environment that's 100% random 100% of the time? how do you deal with that? Because you're going to try to squeeze the risk out. You're going to try to create certainty. But how about this? If it's random, then it's not a right wrong anymore as far as the outcome. If it's random, then you have no control over the outcome, and it's no longer win-lose. What it is sampling an edge, because an edge shows up in a random distribution of outcomes. So the right wrong is not connected to the outcome of the trade or the P&L. The right wrong is connected to only interacting in a disciplined fashion with a plan that has a statistical probability under certain specific conditions. Does that make sense? Ches, well, thank you for the question. There's a link in the bottom of YouTube if you want to visit TraderLab. By the way, you don't have to sign up for it. There is no cost. It's absolutely free at this time to everyone. And there should be a link down there. If not, maybe support here can drop a link in there. But you do have to confirm your Discord username. Make sure you're not spam. And anyone who's visiting in YouTube or listening to this stream after the fact, which many do, there should be a link in here. You can visit TraderLab, say hi. I'd like to meet you in the lab. Now, let's get going. We got a lot to talk about, of course, and this is a big event. Peace breaking out? Does this mean now that all the negative impacts to the U.S. economy, the lack of dollars and purchasing power that has been happening with the fall of the dollar and the, shall we say, the unseen tax of inflation, is that all going away? Here we are. This is the higher time frame chart. This is Investor RT. It's my higher time frame software. I've been using it since the Stone Age. It's probably one of the best software products for auction market theory and volume profile, at least in my opinion. It also exports to Bookmap, so levels that are actually in Investor RT show up in Bookmap, and it saves time. And it's like every software product, you have to invest time to learn it, but there's already templates and everything created for Bookmap users on linsoft.com that you can just import, and it will help you with this. Now, this is Friday. You'll notice Friday we did the Acapulco cliff dive, and then at the end of the day, Friday, we had anticipated short covering, because typically, if it's Friday, do you want to go home over the weekend short, right? Well, maybe not. So this is flattening out, so it leaves a tail. Now, as far as I was concerned, now I have to tell you, what I think and what I do, they're different. But what I'm saying is, as of Friday, and don't forget, we didn't have news. There was nothing going on. This looked just like short covering to me. And then, but let's look what else we know. If the market gets short, then what do we have? We have buy stops above Friday's high. And in here, we got buy stops up here over this high. So the shorts in here, so the longs in here got trapped. Thanks for playing. You get a coupon to the buffet. So they got taken out. Then the shorts are in here. They get taken out. This is market mechanics. I always talk about market mechanics. How does the market work? Market goes up to go down. Market goes what? Up here. Up, if that's too high, to go down. Market goes down to go up. Market goes up, so you get your buyers under here, gaps, and now we have longs in here. What do? We'll see you later. Take them out. Now we get shorts in here. This was Thursday. That was our support. If you followed the streams, you'll see all of this laid out in advance. And now we squeeze some of these guys out. If it's weak and this price here, this yellow line is like a high volume area, or think shopping, a retail price. Now the fuel is in here, the longs. What happens here? Hasta la vista. This price is too high. We're out of here. Now the shorts. See how it might work Doesn't have to, but this is market mechanics. You can learn this in TraderLab. And then we get our short covering into the weekend. Then for today, for me, my plan was initially to see what behavior we have. Now, this yellow line here around 6,600-ish is the high volume or fair price from Friday. Now we have a change. What happens? We gap, and where's our stops? Here. And then where else? Here. Now, what else do I know? I have shorts in here. If I come up in here, what might happen? Well, if I take the buyers out, who are the buyers, by the way? Buy stops. So I call them buyers, but they're really the shorts. So what do the shorts have? Buy stops. If I get my stops and I don't get buying above here, what is this? Let's classify it for what it actually is, a short squeeze. If we get a short squeeze and you're in the TraderLab, do we get bullish eyeballs falling out of our head, or are we traders and we understand this might only be market mechanics, a short squeeze, and an opportunity for continuation shorts? Which would it be? Isn't this an interesting question? And does it present a dilemma? For me, it presents opportunity and risk. So that's about where I go. Now, let's look at some levels. This 66.94 is an outside edge of a distribution of volume. These are like auctions. That's too high. Down here is too low, and this is fair. This is a high volume area, and there's a high volume area. So this acts like support and resistance. So if I open and check it and it's too low, I then can go for the stops up here and find out, is it really too high, or do we just keep motorboating along? And 55, if you guys remember from the streams, is an over-under. This is too high. So on this day, we were selling against this. And actually, this was pretty important. We got below here. See the symmetry in the mechanics? This is an outside edge. There's no precision in the auction. I squeeze, and then it's either going to be inside or come up here. We gap and fill the gap, and there you have it. So for me, not a recommendation. I did take a couple of longs. I've been mostly on the short side. That doesn't make it right. It just is what it is. Trade plan. And then wear a helmet. Is everybody with me? Now I want to remind everybody, there's no cost for this. There's 60 PDFs of structured trades you can download. Now I always have to say, some of this is research. I was doing a Bookmap developers. It's not material to what you see in these. Some are actual trades. Some are just screenshots. Some of this now is incorporated into add-on, and the rest of it, as they say when it comes to research, goes to the happy hunting ground. So anyway, these are available, as well as a library of webinars. We have trade plan building tools in there, some preliminary ideas, podcasts, data mining, and on and on. Now, let's go to Bookmap. You know the condition of the market. What is it? The gap area. Let's go to the RTH open. Here's yesterday's high, and let's go to our grid sheet. What are we doing? We're gapping. It's news. Is news equal? What is news? How do you interpret news? Is it an interrupter, or is it an interrupter, or is it just create, in other words, squeeze, or is it change, right? Well, war starting is a change because of the economic inputs, and we could see that reflected in the market. But what's the difference between the market going up and maybe trend? Is the trend up or down, guys? Well, as day traders, we trade in different time frames. In my world, trend down. What about squeezes? Intraday, the trend can start out going up, but if the higher time frame trend is down, and can be confusing for all of us, of course, unless you have a trade plan that is organized and basically you follow process. Remember, trading is process or plan-oriented statistical probabilities, not what you think. You know what I think? I'm not going to tell you what I think because I'd probably be offensive. But what I think is I've seen this over years and years and years of trading where I see a news input and really all it does is squeeze out a weak side and give an opportunity for continuation with the higher time frame. Does this make sense? Yes, no, who knows? I'm with you, who knows? 1 second. Notice what's happening here, okay, in the higher time frame. Now let's come back. Now let's get into Bookmap in the intraday developing time frame. So we are opening out of range and out of value. What is that? A gap. So we have a gap, and what's the probabilities? What does it mean? If we're out of balance, we're anticipating if we break out of yesterday's range, then the market's moving out of balance. Initially, you want to trade in direction of the breakout. Market is rejecting former interpretation. So it says initially, this is plan-based, look for longs. However, it has nothing to do with the relationship with the higher time frame or an understanding of short squeezes. This is where experience and being in a community that focuses on, I'm going to say, the business of trading, not the emotions, okay, and that kind of change. Yeah, Tapish, you took the IBF. I've been short just about most of the day, and for whatever that means. So we're opening higher outside of range. So how do we handle this? Let's look at statistical probabilities. Write these down, and you have to vet them for yourself. There's a 98% probability to take out the first hour's high or low. That's nice. A 98% probability to take out ETH high or low. An 81% probability to get to the overnight volume point of control, which is way out there someplace. And a 67% probability to test the previous high or low. 67% probability just to check the previous high. 62% probability for the first hour's high. Getting to the previous value area high, 55%. This is previous value area high. This is yesterday's high, about a 67%-ish probability. And let's go from there. So, market is short. We gap. Here's the RTH open. Now, how about getting back to yesterday's high? What was it? About a 67% probability. In other words, fill the gap. So, let's look. This is where time frame is really important. So, now remember, the market is short coming in today. So if the market is short, what might we anticipate? Short covering, perhaps? The squeeze Ethereum? And what do we like to do if we recognize squeeze without additional buying? Now the question becomes, where does that start? Where does it stop? Well, what are we looking at? 67% probability to fill the gap. Underneath this gap is something called high volume node. A higher time frame high volume node. One moment. So this is called VPOC migration. So this is the first suggestion that we're going to move higher. Now, subject to your trade plan. And again, for me, this is nothing for me. I'm sitting here, and I'm going, what? So I know here I have resting liquidity, and I know my gap is here. If I have a gap here with a 67%, I know the following. I can get selling of the gap to fill the gap, and then after I test the gap, then the shorts that are still in here can get squeezed. So then my choices are I can sell this, but I'm only trying to go here, or I can ignore this and look for longs. Either one is okay, subject to time frame. I have no opinion on anything other than edge. I do have an edge So I can trade this or I can just be a tourist. Doesn't matter. Now I'm going to show you a VPOC migration trade. Now, subject to time frame, would you take a short here? Or am I vacuuming? Hold on a second. Actually, it's furs, I think, that's over here. Uh, Hold on one second. Okay, so this sets up a potential short right here. Yes, I'm streaming and vacuuming at the same time. It's my new thing. This is developing volume point of control. When I break low and I find my buyers, this is resistance. I'm going to label it. I follow process. Now, again, subject to time frame, this is either a counter trend, depending what you call counter. See, this is where it gets, well, what's the trend? Is it up or down? Well, interesting, isn't it? Short term, this could be down, and on a developing daily time frame, it can be up. So how do you resolve this? Well, this is where different time frames come in. So for me, what it is higher time frame is down, short term squeeze, and then look for continuation shorts. That was my plan. Now I know other traders are long, 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 and there's not a right wrong. The answers, the answers are specifically based on statistical probabilities and your plan. And if you're reading the news and trading the news, I'm going to say that's not necessarily a recipe. That's consistent. In fact, I want to give you an example that I went through. I'm trying to remember what it was. I think it was Desert Storm. I was trading crude oil, and on the news of the invasion, the market went, oil market went limit up. Okay, and during the night. So everybody was so excited. Here we go. All the long positions in oil. Okay. Then the actual invasion took place, and then it went limit down because the war was going to be over in 20 minutes, theoretically. And then it locked limit, and everybody got blown out. So the thing about this is there's reaction to news, and then there's reality. What is the reality? What do you think? Let you figure that out. So for me, if I was taking this as a short, this is resistance. This is resistance right there. These are shorts in TraderLab. This is advanced methodology and not where developing traders should operate. Let me show you. Just something quick here. I really want to get going. So this is how the auction might work. Think of it really like shopping. That's what the auction is. If this is a fair price. Now, the thing about fair prices, of course, is what happens if we leave the store. Just think of it simply. Now, this is resting liquidity. Here's my buyers, and I come back to the retail price in this time frame, and it's too high. And now I get VPOC migration. This is resistance, and this becomes resistance. That's it. Break low. I'm not paying that. All of this is resistance. Break low. All these are shorts in a very short time frame. Or here's the other side. How do you use this? Then if you sell this, where are we trying to go? Here, 67% probability. Now, up to you, right? Do you want to sell this? Subject to plan and time frame. Now, this will make you nutty because you're going to ask me, Tom, what time frame are you trading? Well, here's the answer. What time frame do you trade? Because different traders, now we're day traders, right? So for me, there's a couple ways to approach this. Subject to your skill set, you can trade both sides, one side, any of that. Or you're going, well, the squeeze is on, and if I look at my higher time frame, where's my fuel? My fuel is there. So if I can squeeze these guys out, fill the gap, which is what this was, I can go long here and then see what happens, because then we're going to come up in here and squeeze these guys out. Now, the thrill, of course, is we don't know how far it's going to go. I do know a couple of things. I know this level right here is resistance, and I know this is resistance, this area. So I have this, which is what's called a microcomposite high volume node around 6,700-ish. So my targets for longs were 67. And you'll see, in fact, the longs I had, that's primarily where I was going. But I was trading both sides. And I'm not saying this is a good idea. I'm just saying or here, let me give you the other thing. A lot of ors because it's trade plan specific. So it's either a short to fill the gap or you're looking to get long to squeeze. Which one will it be? Let's watch. Anyway, this is a short, or it's a step aside, let it come down, see what happens in this area, and then look for longs for the squeeze. This is plan specific. So let's look at it and let's watch the liquidity. So come down. So this is a form of support. Break low, break high. Now, and the reason you're seeing this, in my opinion, is just fill the gap traders. Okay? And I also know 36-ish is a higher time frame, high volume area. Now, let me just give you a quick understanding of what you're seeing. This yellow line is called developing volume point of control. It's high volume, and this will move around with the volume in the intraday developing time frame. Down here is a higher time frame, high volume. The market works the same way. It is attracted to prices. Think of it like shopping. It's the easiest way to get your head wrapped around this. Okay, so if this is too low, and we don't know till hindsight, so we got to get over it, then it's possible. Now we got our shorts either who are fading or longs. If there are longs in here who were taking profit, I couldn't tell you. Not my business and not my job. So right here, I have buyers, break high. This can be a long here, except who are these buyers? Might it just be longs that are covering who got short up here? I don't know. Let me know when you know. I know, I don't know. Let's watch. Now, right here, this is a trigger. Now, I can't buy the low of anything. I'm just letting you know it's not my thing. So if was short, I'm just going for this. I don't care about it. Here, so right here, we have our profit taking. When you break low, this can become resistance. Let me just give you some order flow ideas here. These are called order flow triggers. It's advanced. It doesn't stand in a vacuum. What we're going to try to do with this is identify where the opposite behavior came in. So look here. Look at the difference. Break high. Break under it. This becomes resistance right here. Okay. Break low. This becomes support. Break high. This becomes support. This sets the longs up. Okay. So the longs start here. Just saying. Right there. So right here is a suspect. It's like clueless. So when it breaks below, this is resistance. Going to zero, Tom, except we filled the gap. Who knew? Now look at the buying, how it changes. So this is your resistance. So right here, chop, chop, break high. You can buy any of this, or you could buy this is all up to you. Your stop will go under here or under here. Not a recommendation, clueless. Now let's come back. There's more. And you're going to go, yeah, there's more. Yeah, there is. Now I'm showing you process. I cannot show you anything more than process, because then you will think I actually know what's going to happen. And No, don't know anything. I always know what might happen, and I can pretty much determine where it might happen. But the what will happen, no. So that's not in the business. So we can't know anything. All you know in this business is maybe, maybe this is too low. Well, maybe that's too low, Tom. Well, is this too high? Well, what's this? Is this resistance now? Is that is that resistance? What is this? What is this? Tom, what is that? I don't know. What is it? I don't know. What do you think this is, Tom? Support, break low, advanced order flow. Sell, 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 sell. Shorts if you're inclined. No clue what happens over here. Watch. So, too low, no clue. Up here, time to get long. Break low, resistance. This is called VPOC migration. Got to put a little line on there for you. And for me, it's longs. Why? Squeeze. And the but becomes, if I can get over that high where the fuel is, and I don't get continuation buying, I'm then going to sell it. And I started taking shorts. Watch this. Where's your support? So what is this if you're in TraderLab? This is, again, advanced. What is this? Look, short. When I say short, I should say resistance. It's not a short. But it could be if you have a probability. If we already got yesterday's high with a 68% and filled the gap and you know there's shorts above you, would you still be selling? Me, not so much. Support, no clue. But look at the behavior. Resistance. What's this? Support, break low, resistance. Support, break high, support. VPOC migration, new retail price. It's either going to do the following: break low, go to zero, or break high. Where's my resistance? Becomes what? Support. Now, where are we trying to go? Where was resistance up here? Remember? Too high. So if I buy here, I'm going to scale there, and I'm looking for the squeeze. Now look, break low, back here, sweep. This is a beautiful thing. I get my sweep, I get location, watch. Trigger, sellers were there, sellers are here, and if I come back here, and the VWAP happened to be there too, which is not a big deal to me, but hey, you never know. Then you can get long. And you're trying to come back where? Here, for scale. Now, what do we know? Well, what we know is the shorts in here are on the chopping block. Watch. VPOC migration. This says going higher. Where's my support, Tom? Well, where was it too low? So, too high, too high, too low, too high, moving. This looks good, looking good, Lewis. Looking good, Lewis. Looking good, Lewis. Feels good, Tom. Okay, still looking good. So what is this? New retail price, too low. What's this? New retail price. That's too low. Now this is the fair price. Too high. No clue. By the way, here, no idea. Support. Watch.
Is the story changing any landmarks?
Resistance, support, resistance, support, resistance. Break under here. Where's my support? So you got your VWAP, your mid, no interest to me, support. Okay, so again, going for what? Here. This is my target, primary target. Okay, here. And so 6,700, I got resting liquidity. So I know I got about 10 points. So I can put risk on And assuming, and I'm only going to discuss in the lab here, a minimum two lot configuration. The idea of a two lot, and this is part of the TraderLab, it's about a risk management process. The first contract is basically a 1R, so it's, let's assume you have a 4 point stop, you need a 4 point scale to get risk neutral. Then you manage the second contract, and psychologically, you've got better control over yourself because the worst that happens is you scratch, as opposed to being in a fight and flight and a fear mode. You have a better opportunity if you know you have an edge to get risk neutral. Okay? Did someone say the bear market was over? Really? Well, if it is, let me know. Uh, so we're trying to go, don't forget, the 6700 and the fuel is up here. So as long as I know there's buyers sitting up here, buy stops, if I'm not taking shorts at this point, I'm just saying. So let's see the behavior. So what do we know, Tom? Too low, too low. What's this? This is a new retail price. Here I come down, I have a sweep. It is a long. You have resting liquidity. Now you can target the liquidity, but it's all trade plan specific. And where'd the overnight volume point of control go? I haven't seen it lately. Oh, no, 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 no. By the way, if we come back inside, we're looking to come back here. Not a recommendation. Where is that overnight VPOC? Does somebody have that somewhere? Because oh, here it is. It's under yesterday's low. Oh, that's interesting. And the ETH low is here. Yeah, that's this is a bullish scenario. Short term anyway. So, longs, that's all I can tell you. Longs, 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 longs. Uh, VPOC migration. This is a TraderLab process right here. Anyway, for me, I was trading the 67. And then once I got through 67, I started looking at shorts. This sets up, so this was the target, nice round number resting liquidity. And of course, we can come up here and we have key locations right here. And this 6705, I'm just going to pull you back to it. These are on the price chart. Now, the fact that it's there doesn't mean anything. Where did this? Oh, there it is. This. So this isn't. So think of this like high time frame. This has all the volume forever that's ever traded up in this area since we've been here. Whenever that was, right? And this right here, all it is what I'm doing with this is I was isolating this swing to there, not this, because we broke out. So once I'm out of here, I'm isolating this and I'm looking at what was too high. Let's look at it this way. Too high, too low, too high, too low, fair price. Now, if it becomes too high, I can leave it, and then I start this process here. These are called distributions. Too high, too low, fair. Well, I know the stops are over here, so why wouldn't I be looking there? And where is that, you ask? 6703, right here, this thing. The 5. This is the area. So there's the stops, and I'm just trying to come up in here. My main objective was to take the stops out. After that, all bets are off, and I'm looking at shorts only. But that's might not be appropriate for other traders. Now let's go and see, quote, the challenge. So what is the challenge? So if I get this, now right here, at 6,700, it's a nice strike price, everybody, nice and juicy. We got our stops out, so let's look. Let's look at a potential short. Now, this is when I started selling this thing. Not saying it's any good, you know. So, right here, I'm looking for it to push through, and I have no clue. I have another target up here. It could do anything. Not my job. Here, I get a trigger against the liquidity. The entry could be here, and I'm trying to come back down. And we have our VWAP, our mid, and an outside edge here. So I started selling it here, and I posted in TraderLab mean reversion. You know, and it's mean trying to pick the high of anything is not something that is fortuitous. So let's look at the behavior. Order flow trigger. So I took this, I took a short, I got scaled, I got squeezed out. Okay, so that's okay. Not thrilled, just a trade. Now where's my resistance? It's right there. You see it? They're coming back in. So what I'm looking at is when I come up here, now I have a sweep. This is good for a short. I have liquidity sitting here, and of course it can do anything. And this right here becomes either support or resistance. It's like over under. Watch. This is important. This is important. My sellers are here. Now, what I always suggest to developing traders, and of course, has to be vetted, plan specific, is now what I'm trying to do with this is trade something called mean reversion. Mean reversion is outside in trading. The reason I'm trading mean reversion is higher time frame trend is down. And I don't quote trade off of news. I trade, let's put it this way, been there, done that, no interest. Why? This is typical retail trader behavior. Typical retail traders don't have sustainability in this business, and we have to think differently and behave differently. If the market gets out of whack, you might say, or goes extreme and one side gets squeezed out, what does that do for us? It gives us the opportunity to take the positions that are being squeezed out. So there's the squeezees and the squeezers, So I like to sell. So because to me, what am I doing? I'm trading with the trend. Short-term intraday trend is up, but the higher time frame trend is down. How do you resolve that? Well, we have to think like retail traders, but not act like one. Think like a retail trader. So this is a sweep. This is an outside edge. And this is right here is my over under. And so is this. So I got this. Notice what happened here. I've got, and this is a liquidity marker. It shows me the ads. So I'm seeing sellers come in here in the limit order book. And I had this. I ran out of buyers, and the sellers overwhelmed the buyers here. These guys, the icebergs. So if I come back up, what might I anticipate? This is why I suggest to traders they learn how trade management, and it's not to do. Think about this. This is probably very logical. Let's all think together about this. I sell this. Where would you put your stop? Would you put it there? Why would you? Here's why, in my opinion. Not because it's vetted, but because you're risk adverse and you automatically make decisions that aren't based on statistics, which might say keeping your stop up here has a better probability than putting your stop there. Because we are risk adverse, we're going to put our stop there. Many of us. I don't do that. I'm not saying it's a good idea. If I put my stop there and I get taken out, naturally my loss is bigger. But here's a question for this astute group of traders. What would it mean if over a large sample size, my stop there creates more profitability than your risk adverse stop there? And why might you get taken out? Everybody who's risk adverse, which is most retail trader, and that generates behavior without any extraction of probabilities. Who has the better probability? You with your stop there, or me with my stop here? And we both will get stopped out. Except if I get stopped out here, let's just say I'm micromanaging because I'm operating from fear. not from a business. I'm operating from fear. And you get stopped out there, and I'm still here. Now, remember, I can get stopped out over time, not any one trade. Who has the better probabilities of sustainability and profitability? Here's another short, by the way. So, if I sell here, I got that for stops. If I see the sweep and I got this, I can sell this right here, and this is another short in the TraderLab. In fact, this is nice. Who knew? Watch. Now, so this is my, so this, and then where am I trying to go? All the way out the bottom. Now, this is called a neutral day. And a neutral day means both sides are active. And if this is an extreme and just a short squeeze, I want to be short. And that was my primary plan for today, other than participating in the squeeze. And I always want to say to everybody, I have no idea. I am clueless. And why would an educator say he's clueless? Because my job is not to have an opinion. My job is to understand market mechanics, how most short-term traders get taken out of the business because they don't understand how the market works, and not to think like retail traders. In fact, I coined a saying for myself many years ago: think like a retail trader, don't act like one. So my impulses, right, are to look for the sure thing, and there is none. So then my trade plan says, if the higher time frame is down, this just is a disruption and a squeeze. Anyway, this is my short. And if I take this actually, I took this one. Where was the other one? Oh yeah, right before the stream. This one and this. So this is a beautiful TraderLab short right here. Look at, here's what you have. Sellers are here. You can see the reaction, the change. I come back, I squeeze, I get my sweep. It's wonderful. The sellers here, this is where you need to understand market mechanics and trade management. They're the same sellers that are here. Why? If the weak sellers get taken out and the buy stops, so the weak sellers, and the icebergs who are selling here go, oh really? Have some more. There they are. Pull back. There's your icebergs. Have some more. So what do you see? Sweep, too high, break low. What's this? This is your resistance. It's the same sellers. So when the market comes up, sweep again. All these are shorts in TraderLab. You would try to go here or here, and then out the bottom to whatever, wherever it is, it is. Oh, there it is. So anyway, and there's a short up here also called the IB failure. I made it up years ago. It's in those 60 PDFs. So this is a structured trade if you vetted it. Now, some traders in TraderLab are going to buy this right here. And that doesn't mean if you buy this that it won't go to the moon. No clue. But once it breaks back inside, this is a reversion trade. So I've been trading reversion all day here up until this stream. So let's look. Let's go further. And if you have questions, please post them. Whoop. Let me show you now some other trades. I haven't seen any of this, but let's take a look. So what do I know? Let's come back to what I know. You're going to like this, maybe. I got to make sure I know what I know. I believe this is a this is a VHVN down here. I made these up. So might you use this? You see this behavior here? That creates a long, right? Which I showed you at the top of the stream. What happens though if where it was too low, think of shopping, too low, if I come down and break below this, does that become resistance? If I get below this liquidity, does this become resistance? It's a great question, isn't it? There's got to be hold on. I like to draw these out for you because I want you to understand that there were buyers here. Okay. But what happens, support resistance kind of a thing? What happens if I come back? Wow. Sorry about this here drawing. It's just hard for me to grab these edges here. There you go. By the time I get this, it'll be tomorrow. And this. Let's get this one out here. And then let's go take a look, okay? Are you guys with me so far? Is this making some sense? Now, don't forget, yesterday's high. So these are important levels. If I get back inside yesterday's range, I would get my helmet out of the drawer. What about you? So let's look and see how this might work. Yike. Okay. So apologies for taking some time, but it's got to process all this data as I move it around. So anyway, this is, let's look. So as I come under these levels, like this one, which was support, you see how it behaves here? Support, break, bounce, break, resistance. I can sell this. I have my IB low. There is about a 30% probability to take out first hour's high and low. But if this is a short squeeze, I want to use this. And now I want to come across the range. I'm back inside of yesterday's range. It says the party might be over, and now it's just lean on the short side. So even if you didn't get short up here, in my opinion, not a recommendation, there's no reason to be long. Is there? What do you think? I don't know. So this right here sets up a short. I'm leaning against other levels that were created by the buyers. If I lose those guys and now I'm under here and I'm inside of the range, I can be selling this. With my stop up above here, I can be selling any of this. And once I come down under here, now there's liquidity here. Here's the possibilities. We can come back across the range and just rotate in here. That's one possibility. The other possibility is we got new longs in here thinking that everything is wonderful, which it might be, and now we have them and their stops are under this. And then we have to see if we get additional selling. So anyway, for me, the primary trades today were short other than the squeeze. So let's look at the behavior here. This says counter rotation. Resistance is now here. Break low. Where are we trying to go? Here. 6,600 is the next target down here. It's the high volume or retail price from Friday's RTH. How does the market work in all time frames? It checks volume. This is the highest volume from Friday. In other words, this was the fair price. Now, and this is Friday's value area where 70% of the volume took place below here. So this is another target. Let's look at it. We opened higher outside of range. The probability of getting to the previous value area high or low is 54%. And it's about a 54% probability to come here. So really 50-50. But now that's statistical probabilities. Now let's put the statistics down on our desk. Let's do some thinking. What is the context? What is the condition of the market? What's the trend? Does anybody think the trend is up? Killaton, I think I'm going to send one of those over to your house. So this becomes resistance. What it is with this is you need a certain amount to grab these drawings and move them. Why don't you try that? Then you'll understand what the issue is if it's too narrow. Resistance. There's a sweep. There's a sweep. This becomes, what is this? Support, break under becomes resistance. Where are we trying to go? Next place is here, not a recommendation. You have to manage your trade, and then here. So this is the next probability, 6,600. What's the probability of getting there? Well, it's not high. And now you're going to go, well, it's 38%. Why would I go for that statistic? Because statistics are not material. It doesn't supersede the context. And that is what we call trend. Athene is asking me, how do I anticipate the higher time frame trend? You said it's short now. The higher time frame trend has always been short. I mean, not always, but it is short. So we're operating inside of multiple time frames. Let's go take a look here. There's a sweep that says counter rotation. We swept into there. So now we have to see the behavior here. Let's see what it does. Not a recommendation. What is the trend? Would we agree it's down? Would we maybe agree it's 67.55? This is too high. This was too low here. This is a high volume area that we rejected. So for me, in all time frames at the moment, other than the intraday, the trend's down. So when I get squeezes, I want to sell them. So far, we're not in a bull market, guys. Are we? Maybe it is for you, and it might be in your time frame where you only want to take longs. Me, I don't want to own stocks. Any opportunity for me, as long as the trend is down, is to sell it. So depending on the time frame you trade, as day traders, you could be long, you could be short. But if the higher time frame trend is down, maybe you'll use the squeezes there for continuation shorts. What do we do in the intraday time frame? We use counter rotations for continuation shorts, if that's your plan. I'm doing the same thing. I'm just in multiple time frames. So I'm using the squeezes, the counter rotations, all the same for continuation shorts. So when I'm in Bookmap, once I get the squeeze out, I'm using continuation shorts for continuation shorts, counter rotations for continuation shorts on all time frames, counter rotations for continuation shorts, counter rotations for continuation shorts, counter rotations, and this one is primarily here. Let's look at this. For continuation shorts. This is a sweep and support. So if I break under here, I might be considering another continuation something or other, not a recommendation. Why am I trading towards that? Because what does the market do? The market is a shopping experience. So what might happen? Well, maybe we'll go back to the fair price from Friday, because what's above us is what? Too high. When would we be bullish? I can't tell you. It's not on the list for me. When would we be bullish? What time frame are you talking about? Buying stocks or using squeezes for continuation shorts? Bullish is not on my plan currently. There would have to be a substantial change. When we have squeezes, what happens to the sellers? They're taking control on all the counter rotations so far. So me, No way. By the way, this is a IB continuation trade. This is a structured trade. It's right here. So coming down right here, we have a sweep that gives us the counter rotation. The other side of the sweep here, there's a buy sweep, suggests counter rotation. So you see how your support works and your resistance is up here. The IB trade is a break and a continuation. So, and now the trend, don't forget, is down. Intraday, down. I can sell what? This. Break. So any of this can be sold, and you're trying to go where? Here. Structured trade in the TraderLab. So to answer your question, when would I think it's long? I can't put my head there, Ethan. I wouldn't let it in my head. I'm only thinking right now. So I just trade what's here. And that kind of question is not relevant, really, in my opinion, to you participating right now in the opportunity the market is presenting you. The question you should be asking is, what has changed? Has anything changed? If the answer is no, and you found your sellers, what do you want to do about it? That's the question. The question here is a structured trade that's a short. Now the job is to get risk neutral, which means, remember, a two lot configuration. This trade would fail up here, not there, because we can come up, go down, right? So, and everybody has to vet their trade plan. In other words, what time frame or how do you manage your stops? What do you do? Everybody's different. Some traders are going to drop a VWAP on this thing, if that's your deal. Me, not so much, but doesn't mean it won't work. Whatever process you deploy, whatever it is, you just have to have vetted it so you know it gives you an edge. I don't use VWAPs in my trading specifically. I have a structured trade that I've shared that's called VWAP to VPOC, but it has to be in a directional market. Now, is this a directional market? Is this a trending market? Or what is this? What do you think? Where's our resistance? Isn't it here? There's a sweep. Subject to, the sweep says the potential for continuation down. And this is, I believe, this is our new VWAP. So I anchored a VWAP here. Never done this before in the stream. I'm just showing you some ideas. I don't use them, but I know, the thing about operating in randomness, which is what all this is, what rotation? Is it going to stop here? Or is it going to go where? There? Well, this is where we came outside of the first hour. And this is where so far it's been too high. And right here. So if this is my resistance. So if this is an anchored VWAP from over here, and I have a sweep, how can I use a VWAP? Well, what this is saying, really what a VWAP is, volume weighted average price. It's showing me the average seller in this is, the sellers are below here. So as long as I'm under here or under there, my trade is intact. If it comes a little bit above here, it doesn't matter to me. What matters to me is I know the average seller is below here, and I have this sweep, so this is material to me, and I know this is where the buy stops are going to be up above here. So if I take a short for the IB continuation trade, I'd be risk neutral, and my target is down here. Now my trade plan would suggest what? Hold for there and manage, and the thing about managing is, this is what I think for many traders is, what time frame are you operating in? So this is just a leg. And what do we know? Let's come back to the things we know. If I have shorts in here, what else is in here? Buy stops. So if I can squeeze the weak shorts, I can then, depending on the behavior, continue to look for continuation shorts if it's aligned with my plan to come there. This is where I'm working towards if I was actually in this thing. So let's watch the behavior as we come back up. Remember, the stops are here. Here's my sweep. I'm above my VWAP. So let's see what it does. So I've got my buyers, and my sellers were very active up in here. So let's see what they do. Now, if I can't keep going and I can break below here, it might be an area to observe. I do not use VWAPs like many do. It doesn't mean you can't. Whatever you use, it must be consistent. Some traders are going to trail their stop behind a VWAP. Not my thing, but it could be yours. You have to vet it. The thing about trading that I found is these rotations are random. In other words, remember, 100% random 100% of the time. So what cannot be random? You cannot be random. You must use anchored inputs. And in fact, in the TraderLab, the primer webinar I did, it's got about 37,000 views, and it's the first one, if you come to TraderLab, and remember, there's no cost for it. It's the first one that talks about anchored inputs. Most of us are trying to squeeze risk out, create certainty, of course. And what we do is we get this boatload of indicators, and we think it's more indicators for more certainty. That's a logical thing. And the drive for certainty is what makes us go, because of our beliefs, sends us down a path. And that path can be 10 years or longer, or you'll never get out of it because you're going to constantly have random winners with random inputs. And my VWAP YS is anchored. It's not off. It's only from here. So this is called an anchored VWAP. The actual VWAP is somewhere up here. Okay? So YS, do you know the difference between an anchored VWAP and just the RTH VWAP? We have full session VWAP here. We have RTH VWAP here, which we are below. We're below the mid. And we have the anchored VWAP. So all the anchored VWAP is doing is tracking this average seller, which is below here, until we get above here. If we get above here, now these sellers who have their stops in this leg are getting abused. And then however you want to use it is up to you. What I know is when I get above this VWAP, my average seller is getting squeezed. So again, I don't make recommendations, but I am showing you some ideas. You know, what I do and other traders do are totally different because it's time frame. You see? And this is a previous area of interest, but this is my primary target, and it's not a recommendation. It never has to go there. So let's see what else we got here. So I'm looking now to see if my sellers re-engage in this area because they absorbed this right here. There's a sweep. So I want to watch this area. Remember, VWAPs are just where the average buyer and average seller, average buyer is above the seller. But it might only be a counter rotation. There's my sellers. Now I don't have any idea. I am working to trade this. It's not a recommendation. This thing can come all the way back in and come across. Then I go to the Parketeria. Sweep. My sellers are back in at the moment, right here. So this could be something to consider. I came back to my IB. Subject to the behavior right here. This is either a short after a squeeze, and then it has to get under here again, and under here, and then trying to go there. So this is the target. Never has to go there. It's not material. It's just maybe. I know, but I know in the auction what this represents, you see. It represents the fair price. So does that mean what's above us now is unfair? This is the high volume in the current developing time frame. If that's too high, the market can leave it and go
Is
back
the
to what
story
was
changing any
yesterday's fair
landmarks?
price. Is this too low? So that sets this up. And if I get below here, I can go further or not. Not important. Take it one piece at a time. Are you guys tracking? So let's see what we do. This is important right here. The buyers squeeze out these guys and we come back. We can come back across the range. I have no idea. I don't try it. I don't predict. I found that I don't know. My guess, and that's all. A prediction is a guess, right? The thing that I found as far as what trading is, it's not being right. It's not P&L based. It is process based, and then a random distribution of outcomes. So what I know is where behavior might take place. And I know that if the market is short in any time frame, it could always squeeze the side. In other words, think about this for multiple time frames. If the shorts are in here, what else is in here? Buyers, buy stops. If the longs come in here or short covering, it's one or the other, and I find my sellers wherever they are, and my sellers overwhelm my buyers, I'm going to counter rotate. Then the question is, if we rotate, do the buyers absorb the sellers, or or when the buyers come back in, do the sellers get squeezed out? It's always going to be one or the other. So then we just have to
In context.
wait. And if we put a trade on, then our goal is to try to get risk neutral and either, if we come across here, then, back for me, back in the Barca Lounger. But right now, and this is very important, the behavior right here. So we have to see what happens here. And I know you're going to love this. I'm going to say it's either going to break up or break down right from here. So this is the like an over under. So let's see what it does. So the thing is, we have our buyers and a sweep. So if we get a sweep, and what happened here? Where's our buyers? They're getting absorbed. So now what else happens? I get a sweep here. That sets, so I got buyers here, I got sellers here. So one side is going to throw the towel in. Which one? I don't know the answer, so I just, as they say, act accordingly. I do see my buyers, and it looks like my sellers are kind of on the couch at the moment. But this is important. So this is really important right here. The buyers take control, then we're going to come further up into these guys. And this is like this is a consolidation, and you can see it here. Outside edges up here, outside edges down here. We're doing this. I'm not paying that. Yeah, but it's on sale. Retail price, high volume. So in this structure right here, this consolidation, the fair price is here. So this is a reversion right here. I'm not paying that. Fair price. Oh, it's on sale. Fair price, high volume. So this right here is going to create, this distribution is like a deciding point. If I can get above here, I'm either going to come back and break low, or I'm going to continue to squeeze and get up here. And I can't tell you at the moment, except the buyers seem to be doing a reasonable job. We have to see if they get met with sellers. But I am seeing the buyers here. So we got to see. Okay? That's as deep as this gets. Notice what we're trading at the moment, depending how you look at this thing. This is the auction. I'm not paying that thing shopping. Yeah, but it's on sale. High volume. So I'm doing this. It's a consolidation. If this high volume here becomes too low, I can move away from it. If this outside edge becomes too high, I can come back here. This is what it is doing. So I can't tell you how it's going to resolve. I am seeing my buyers. So we have to see if the buyers can overwhelm the sellers over here, or which side. I still see the buyers are pretty active here. So let's see. See, the thing to understand about order flow is the fact you see this delta, these bubbles, which are the buyers. It's about looking at the buyers and saying, are they making progress or are they being absorbed? There's the sellers. So the order flow is telling me the buyers seem to be more aggressive at the moment. What we won't know, and you could see the buyers, you see. So the buyers now are starting to push the sellers out. Let's see what happens. So, subject to your plan, if you took the IB, this one, you'd be risk neutral and either you'd scratch, and let's assume you scratch the trade. No trade management. You're asleep at the switch. Okay, let's watch the selling here against this location. There's our sellers. So we want to see what happens right here. So there's absorption going on here. Now, these aren't specifically trades anybody ought to take. So if our buyers can't get above here, then we are going to potentially come back there. So why? Let's look at the market mechanics for a moment, because this really kind of will give you a sense of how this might work. So if you're when we're short over here, we have our buyers, right? Now we get squeeze. That's what this is. If we squeeze, then I need to be looking here at order flow, and I have resting, let me get this over here, resting liquidity. So what I'm doing is aligning location. So this is what was this before? Wasn't this resistance? Resistance becomes potentially support. This is resistance, this is support. Coming back to high volume is the retail price. So if this is too low, I go that way. If I can get below it, I'm going to come on the other side. If I get below this, where I had my buyers, then I continue on my merry way, and I'm trying to, come down, right? And I can't tell you what it'll do. I just take the trades and I attempt alignment. Now, what I saw was exhaustion up here, and I'm still seeing buyers. Now, the thing about buyers is, it's not the fact that the buyers are there, it's what happens to them. In other words, if I got buyers like right here and they don't go up, what is that telling me? The sellers are here and they're being absorbed. If I break under here and I have little microstructure there, why am I not at the moment getting above this? Because I have sellers so far sitting over here and there. Here's my support. So let's watch it. So now, what does that mean now? How do we operate in this thing? Well, I'm not a scalper. That's a waste of time and overhead. So I don't do that. So what I found, I'm only talking about me, not a recommendation, is I want to trade the broader range, the bigger rotations. And what it allows me to do is probe. I'm not one of these traders that focuses on P&L. P&L is the outcome of a plan with a statistical edge. The casinos don't basically hang on every every hand. What they have to do to extract the edge, and that's what you need as a developing trader to know what trades pay you over time, you know, not randomly. The distribution's random, but you need an edge. If you have no edge, you're still going to have the winners, but you're going to go out of business. It's kind of a problem, don't you think? Let's see what happens here. This is really an important, right here, what's happening is pretty important. Because if we can't push higher, we're coming back. If we keep going, then that's that. So let's watch it here. Still seeing the buyers. Still seeing the buyers. So this 45 area, this is where the absorption was. So we want to see what happens up here, right here. So we can tell by looking at this right here, that because we have sellers there, what happens if the price comes back to where the sellers were? And look, we could see the limited order book. So the sellers are hanging out. They didn't pull. There's a iceberg. What do we think about this? Is that a short? What do you think? Can you see how order flow might give you some insight? So let's watch. So right here is where the fight is, really, in the short time frame. It's right here. So if you're operating subject to your plan, and don't forget variable high volume node, what was that? Remember? Got a lot of pieces here, right? But you can organize this. So we got to get below here. Remember, retail price. If it's too low, I'm going to come back up. If I can get below it, then I'm back in the Barca Lounger short. And where am I trying to go? Not a recommendation, just saying. This is my target right there. So any shorts I'm taking, and I want to stress, I take stops like you do. So what's the big deal? Oh, I don't want to lose. Oh, well, wrong business. What is losing, by the way? How about this? Overhead and cost of production. The random distribution of outcomes means you're going to take stops. And you could have a great trading process, but you have to take stops to extract your edge. Casinos have to pay the gamblers because of the randomness, but they don't change the games. They don't change the game because they paid 4 gamblers or 5 gamblers in a row. They know that if they have a statistical edge, they need to sample the market to extract the edge. We are emotionally attached. I'm going to suggest that doesn't work. Again, my experience, yours might be different, but most retail traders have no sustainability in this business because it's all about P&L for them. And when I see traders who come to TraderLab who focus on P&L and being right, or use the terms I scalped the trade, which is really interchangeable with I have no plan, I just bailed out because of fear of giving it back. By the way, is that you? Along the way, it's all of us. But every trader has to understand their self-talk and their rationalization for behavior that'll take them out of the business. We all rationalize. Yeah, it looked like it was going to, it does or doesn't. That's random. How about an anchored process? So you know not what will happen right here, but you know what happens over a random distribution of outcomes. Does that tangible metric give you control over your fear and your FOMO? What most developing traders don't understand is they're just like everybody else. We all think we're special, and we forget that this isn't a video game. This is business. So we're trying to go here. This is the fair price from Friday, and this is the fair price currently in our developing time frame. Well, this might be too high. Don't forget where the stops were. If I get the buy stops out and I have no buyers up here, unless we come back and we'll rotate, that's part of day trading, then this or not, right? So this is where I'm trying to go. I'm just saying that's the plan. And because the rotations are random, I get taken out, I get thrown under the bus in the short term because I'm trading rotations, you see. So we trade this, but we are aligning with multiple time frames. So if the higher time frame is down, and this is a news-based short squeeze, and until it happens, it hasn't, what do? Well, are you, as they say, buying it, or are you just trading? And by the way, the market can go up and close on the high of the day and make new highs. It's not our business, right? Is it our business? It's not my business because I have no idea. So if I know I don't know, I'm not in the business of being rigid or myopic. I'm in the business of alignment based on what the participants do. As a trader, you're trading participant behavior and valuation. And what our objective is to align with it. Is everybody tracking? You guys have questions? Post them. If you're interested in TraderLab, if you're in YouTube, there's a link down there. You can visit the TraderLab. It's a community of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading. It doesn't matter how you trade or what you do. What does matter is if you keep waking up with Trader Groundhog Day, work hard, random winners, but you're still not consistent or profitable, then it may not be your effort. You may be actually trying to fix a defective process, but because of the random winners, I call that Trader Groundhog Day. You're just going to keep doing the same thing and you're not going to get a different outcome. You will have random winners because we all do. If you open your software toolbox, and I always asked myself this many years ago, you have 100, 200 indicators in there. And if you use one indicator or 20 indicators, you're still going to have random winners, but you're still going to lose. So if it doesn't have an edge, how can you sustain yourself? That's the question. I think you can get some answers in the TraderLab. I'm not saying it's the one-off solution for you, because most retail traders do not understand that the biggest obstacle is not setups or trade plans. Anybody can create that if they do the work. The biggest obstacle is you, your psychology, your fear, your certainty, right? You're certain because you're seeking certainty and to avoid risk. So you are seeking certainty. You're certain that the market's going to go up. Well, is it? Where did the buyers get absorbed? What does that do if you understand order flow? And where is it? If you understand auction market theory and we're inside of yesterday's range, here's a question for this astute group of traders. Do you want to be long or do you want to be short? And this is not a recommendation, but you know where I'm trying to go. This is my target, and it's only one target, but it's my primary target so far. And where it goes from here, it doesn't matter. What does matter is understanding how the market works, why it does what it does, how at times you get in alignment with it, and you're going to take stops, so we have to get over it. What is a stop? If it's a right or wrong in your mind, you're already on your way out the door. You have to change everything you believe about this business in order to create sustainability. The beliefs you bring, remember, you're going to try to solve for what you believe the business is. And I'm going to suggest to you maybe you're trying to solve for the wrong issue, because the business is unlike anything you've ever done before. And if you're interested in learning the business, you have an open invitation to come to the TraderLab. Remember, TraderLab's here for everybody, and there's no cost for it currently. Use the link in the bottom of YouTube. If you want to visit TraderLab, there's a library of webinars, a document section, also 60 PDFs of structured trades you can download, and these are not plug and play. By now you know that doesn't work. You actually have to learn how to trade. And it's not about the setups. That's not the issue. It's really all about you. Please give a like. Visit the TraderLab. If you're in YouTube, hit the like button. Support the TraderLab. TraderLab's here for you. And as long as it's available at no cost, you might want to visit. And remember, it's open to everybody. Thanks so much for visiting TraderLab today, guys. I hope you got something from this. Appreciate your interest in TraderLab and in YouTube. Thank you so much for visiting. Use that link down there. Visit to TraderLab. And also, please leave a like and support the stream. It encourages me to continue. Thanks again, guys. Have a super day. And remember, if you don't have a plan, you're gambling. And I always say, if you're going to gamble, go to a casino, get the cocktails and the ticket to the buffet. That's entertainment. The TraderLab is about the business of trading. If you're interested in building a career path and something potentially sustainable and you have to do the work and past performance is not indicative of future results, TraderLab's here for you. Thanks again, guys. Look forward to seeing you tomorrow.